Hello, in this video I will try to explain something related to risk. Okay? As I told you before, trading or investing have risk to lose money. Okay? This is something that you should understand always. There is always risk. Okay? Now I will try to explain to you the risk by explaining the value of the stock, of any given stock. Value. Okay? The value of the stock. The value of the stock by explaining the risk. Okay. A stock is $100. Now, today is $100. Okay? You put a line like this, a horizontal line. This is today. I ask you the question. Is $100 the price of this stock XYZ, just an example. XYZ, just an example. In your opinion, is this $100 stock, is it expensive or cheap? Okay? Now, what is your answer? Oh, you tell me, okay, or maybe 100. I see some stocks with $5. This is too much expensive. I cannot buy it. It's too much expensive. I don't like it. Okay? Now, $5. Oh, this is cheap. $2. 10 cents. Okay? I will tell you something different. The value is because a lot of investors invest in this company. And a lot of mutual funds, they buy this company because they see something good in it. Okay? Investors, especially the big ones, they are not stupid. Okay? They are not stupid. They give 100, they buy this $100 because they know a lot of things that you, the average investor, average trader, you don't know. But apparently, you should see the price of the stock. Now, you value the stock according to its price. Okay? Now, I give you another idea. So, we're not speaking about other stocks, or 5 or 10. You are speaking just about this stock. Is this a stock, $100, is it cheap or expensive? Now, if you want to think about it, the value, who knows the value of this stock? For me, the stock value is what you see daily. Okay? This is the value. There is no other value. It's not because it was 60, it goes 100, and then, I'll just give you an example. It was 60 last year, for example, 2012. Now we are in 2013. From $60 to 100. Now last year, the value was 60. It wasn't 100. We don't know, okay? So last year it was 60. Now if you buy it, okay, and now it's 100, you make a large profit. But you don't know that the stock will go up, and no one knows. Okay? So, now it is 100. Suppose that this year, it goes to 90. Some people think that because it goes from 100 to 90, it is a cheap stock. And they call it, some people, they buy it because it goes down, and they say, okay, this is a bargain. I will buy it from 90, and since it's a good stock, good company, it will go up to $200 in 1 year or something. I will ask you the question. Think about this question. How do you know that this stock, 90, it goes up? How do you know? Do you have an answer? You will have no answer. Why? Why you have no answer that this 90 could go to 100? Okay? You don't have no answer. If you say to me, oh, it could go, Okay, tell me which is stock. Oh, we buy this stock and we become rich. Okay? Why? Because today it is 90. How do you know that tomorrow, which is the future, we have a catastrophe in America? We have a crisis, we have an accident, we have a war in the world. We don't know what will happen to tomorrow. Okay? So suppose that 90 it goes tomorrow to 80 because there's an accident or something. Do you think that 80 is cheap? Okay? So I want just to make sure that you understand risk. There is no a sure thing in trading or investing. There is no a sure thing. Okay? No sure thing. The future is in the hands of God or wherever you think, nature or something, or stock market, wherever you think of. So there is no sure thing. And the people, what's the people? The beginners, the people who are investing, the new ones, and the people who are beginners in trading, they think that in the stock market there is a sure thing. They want to put all their money there. In like penny stock, it is 10 cents. 10 cents. They want to put 10,000, 20,000 there. And after 1 year, they will have $30. So they will become millionaire, as some people claim. It can happen, but you don't know. This is the problem. You will know when it is history. Okay? When it is history, when it is the past. Because the people always look at the past, and a professional looks to now and the future. He never took to the past. Okay? The past does not guarantee the future return. Okay? It does not. And if someone tells you, okay, this stock has done good last year, buy it. I don't say he is a liar, but tell him, how do you know? Do you have something? Do you know the future? He say, no, I don't know your future. And how? It's tomorrow. Tomorrow we have a war. Okay? A war between North Korea and South Korea. We have a lot of trouble in the world. Now, the stock market is very, very sensible to this political, to this economical thing. So all the stock market goes down. So who tells you that the stock market will go up or down? Okay? So this thing is what you call risk. Now, so we spoke about the value. Now we speak about risk, about trading and investing versus investing. When someone invests, like see here, trading, investing. Okay? When someone invests, he invests for the long run, more than 1 year. 1 year. He should know what we call the fundamentals of the company. Fundamentals. What do you mean by fundamentals? It means he should know why he is investing in that company, not another company. He should know, for example, there are a lot of earnings, the company is expanding, it's a very, very big company, well known, it's growing. He do his research, or he asks some people to do his research for him, and he put a lot of money. Now, but investing, people who put, for example, he put $1 million in a stock. Okay, he buys through a year, he buys $1 million. If the stock is 100, it goes to 90. Do you think that this guy will sell? No, he will not sell, because he thinks that the stock, it may go up because the company is good, and one time he will be rewarded. So he can go until $50. That's why investing, you have the big risk. If you are wrong in one stock, if you are wrong, you will lose a lot of money, because investing, they don't go trade, they go buy today and 6 months or 1 month they sell. It's not the investing, it's not the way the people they invest, it's not trading. Okay, so but if from one hand, some years, like for example Google, just take an example, Google, it was 100 in some years, and now it is 800 something. You see how much money he makes, this guy? From 1 million, he can get $8 million. It's too much money, and it's good, and he's investing. That's why the investors, in order to have the risk, to have less risk, what they do? They don't buy one stock. Most of the rich, they buy the general market, okay? They buy, for example, ETFs, okay? They buy mutual fund, they buy bonds, they buy other stuff, okay? It means they buy a lot of diversified classes, like ETFs, mutual funds, bonds, and they can add stocks, okay, because they are risky. Because why do people buy a lot like this? Because they don't go that much up and then get that much down, okay, because they buy the whole market, the whole sector, okay, international, like banking system. It means they buy general things. This is investing, okay? They have less risk if they diversify in a lot of things, not just in one thing or one stock or 2 or 3. That's why you see that their portfolio grows up and up. Yes, little bit, but it's good. Now, trading, why it is so risky than investing? Because they buy, and they sell very quick if the thing goes wrong. And most of the people they trade, most of them, they are not like investors. Investors, they have billions and billions of dollars to spend. Now trading is less. Okay, so this is trading versus investing in risk. So, for example, the stocks are riskier than mutual funds, ETFs, bonds, and something. Okay, in stocks you can have a very large return, but you can lose a lot of money. That's why the more risk you have, the more reward and loss you can have. Okay, so in trading stocks, even in trading stocks, there is a difference. I'll give you an example. If you buy, for example, some stocks that give a lot of dividend, stocks with large dividend, for example, REITs or banks or banking system or other stuff, most of the time the stocks, they give 5% like dividend, or 6 or 7 or 10. So the stock doesn't go up that much, it doesn't go like this. If you put a line, you buy here, it goes like this, like this, like this. So it means they don't have like a very large capital gain, okay? So just a little bit. So these stocks are less riskier than other stocks. I will give you another stocks that are riskier, okay? Risky stocks like internet stocks, internet, electronics, healthcare stocks. There are a lot of sectors like this, industries, that if you buy these stocks, you will see that they go up very, very quick, they go down very, very quick. You have a breakout each time. So these are very risky. So if you go to these stocks, you expect either more return or more gains or more loss. It means you will lose a lot if you fail to get disciplined and to get out very quick. So you lose a lot of money and you can give a lot of money. Okay, this is in general what I expect from risk. Okay, and some people they take this as a risk is tax. Now, investing and trading. In tax, it's not the same. If you hold something more than 1 year, 1 year and more, you will be taxed less than in trading. If you are buying one thing, stock, for 1 day, 1 week, 2 months, 6 months, 8 months, 11 months, less than 1 year, you will be taxed like in income tax, which is higher than this. Okay? This is a risk. So that's why I tell you something very funny. The rich, when they invest large money into a very broad thing. They don't. If they sell after 1 year, they will be taxed, for example, 15% of the gain. Okay? And you are doing trading, you will get taxed 25. So 25% taken from your gain, it's too much money. Okay? And if you have dividend, they are taxed 15% is good. But in trading, this is the thing. It's an income. So since it's an income, it's 25%. Now, the investing, since it is more than 1 year, they are taxed 15%. It means you give the government 15% or the IRS. Okay? You give them only 15%. But when you trade, you give them 25%. Now you should decide for your life. Are you going to be a trader or are you going to be an investor? You should see the risk. Always there is a risk. Any investment has a risk. Okay? So some are less risky and some are more risky. Okay? This, you should put it in mind when you are doing your stuff, you're trading or investing. You put it in mind, and it's a good thing to think about this risk. So if you have any question about all what we have said in this video, please just comment, or if you have something to add to this, just comment. And thank you very much. Thank you.